Hi everyone, welcome back. Now let's look at illustration number 31 of ICAI Study Material. Company EFG enters into a property lease with entity H. Alright, so there are two parties, EFG and H. We still do not know which party is the lessee and which party is the lessor. The initial term of the lease is 10 years with a 5-year renewal option. All right, so when EFG and entity H are entering into the agreement, they have agreed that the term of the lease will be 10 years, but at the end of 10th year, both the parties, if they agree to, they can extend the lease for another period of 5 years. They have an option to extend it for a period of 5 years. The economic life of the property is 40 years. The asset is having a total life of 40 years, of which the lease term is going to be 10 plus 5-year renewal option. All right. The asset's life is 40 years, but the lease agreement is for a period of 10 years with a 5-year renewal option. The fair value of the leased property is rupees 50 lakhs. What does this mean? If, let's say, we go and sell the property today in the market, then we are expected to receive 50 lakh rupees. That is the meaning of fair value. If I go and sell the asset today in the market, I am expected to receive 50 lakh rupees. That is the implication of fair value. Company EFG has an option to purchase the property at the end of lease term for an amount of rupees 30 lakhs. Now it is getting clearer over here that EFG is actually the lessee in this case because EFG is having an option to purchase the asset. It has an option to purchase the asset, meaning a lessee only will actually have an option to buy the asset. The lessor is actually the owner of the asset. The lessor will never have an option to purchase. The lessee is going to have an option to purchase. And in this case, EFG is basically the lessee. EFG is the lessee and entity H is the lessor. Now they've stated that EFG has an option to purchase the property at the end of lease term for an amount of rupees 30 lakhs. It means at the end of 10th year, EFG can purchase the asset for an amount of rupees 30 lakhs. We are entering into the agreement today. At the end of 10th year, EFG actually has got two options. One, it has an option to purchase the asset for an amount of 30 lakhs, or it has an option to renew the contract. It has an option to renew the lease contract for an additional period of 5 years. The first advance annual payment is rupees 5 lakhs with an increase of 3% every year thereafter. All right, remember payments are being made in advance and they're annual. All right, they're being made in advance and they're made annually. And the first payment that we are making is rupees 5 lakhs with an increase of 3% every year after that. The interest rate implicit in lease is 9.04 percentage. Entity H gives EFG an incentive of rupees 2 lakhs, which is payable at the beginning of year 2. What does this mean? Incentive is basically nothing but any cash flow that is moving from the lessor to the lessee. Incentive represents a cash flow that is moving from lessor to lessee. And therefore, over here they've mentioned that entity H is giving EFG an incentive of 2 lakhs, which means entity H will be giving EFG an amount of rupees 2 lakhs at the beginning of year 2. Beginning of year 2 or end of year 1, both of them are the same. All right, so at the beginning of year 2 or end of year 1, entity H is going to actually make a payment through EFG of rupees 2 lakh. In other words, EFG will actually receive 2 lakhs. EFG is going to receive 2 lakhs at the beginning of year 2. Why is it actually making the payment? Why is entity H giving money to EFG? It is being made to make a tenant improvement. All right, basically EFG is going to incur certain costs and entity H is basically reimbursing those costs to EFG. All right, as an incentive, entity H is reimbursing those costs to EFG. Company EFG is reasonably certain to exercise the purchase option. All right. Today itself, the entity is determining that EFG is reasonably certain to exercise that purchase option, which means at the end of 10th year, we are likely to pay rupees 30 lakhs. All right. EFG is reasonably certain to exercise the purchase option, which means we are reasonably certain to pay rupees 30 lakhs at the end of 10th year. The question is, how would EFG measure the right of use asset and lease liability over the lease term? Okay, now we know that in the books of lessee, which is EFG in this case, ROU asset and lease liability are recognized as present value of the future lease payments that EFG is expected to make. All right, EFG is going to recognize a right of use asset and a lease liability at the present value of the future payments that it is expected to make. Over here, the future payments that it is expected to make is actually the lease payment, which is 5 lakhs, which will increase every year at the rate of 3%. And it is also expected to make a payment of rupees 30 lakhs at the end of 10th year. So we will be actually taking the present value of all the future lease payments, which is 5 lakhs, and that increases at 3% every year. And we will also be taking the present value of 30 lakhs that is going to be paid at the end of 10th year. Why are we taking that? Because today we believe that we are reasonably certain that the purchase option will be exercised. Where we are certain that the reasonably certain that the purchase option will be exercised, then the present value of the amount that we are expected to pay for buying the asset, the present value of the amount that we are expected to pay for purchasing the asset should also be taken into account, and we should then recognize that as part of ROU asset and lease liability. All right, any amount that you're expected to pay for purchasing the asset is also supposed to be captured and included in the value of right of use asset and the lease liability. Also, additionally, at the beginning of year two, EFG is actually receiving some money. All right, EFG is actually receiving 2 lakh rupees at the beginning of year two. When we are calculating the present value, we should not only take the present value of the payments that EFG is expected to make, but we should also deduct any receipts that EFG is expected to receive. All right, we are also supposed to deduct any cash flows that EFG is expected to receive from the lessor. For the purpose of calculating ROU asset and lease liability, we should also consider any cash inflows or any incentives that lessee is going to receive from the lessor. All right, so there are three types of cash flows. One, lease payments of 5 lakhs, which will increase every year at the rate of 3%. We will consider that. Two, we will consider 30 lakhs that I'm going to make as a payment at the end of 10th year. And three, we are also going to consider a cash inflow or incentive that the lessee is receiving from the lessor at the beginning of year two. Now we are going to capture all these cash flows, discount it at 9.04% to calculate the right of use asset and the lease liability. Now let's start solving the question. All right. Now let's start plotting year. We've got 10 years. This lease is of a 10-year period. So let's start plotting all of them. I'm starting with zero because there's a payment that is being made today itself. At the commencement of lease itself, there's a payment that is being made, and therefore I'm starting with zero. So I've got 0, 1, 2, 3, and so on until year 10. And then we have got the cash flows. The first cash flow that we are making is equal to 5 lakh rupees. The first cash flow that we are making is equal to 5 lakh rupees. The second cash flow will be 5 lakh multiplied by 1.03. All right, every year it increases by 3%. So it will be 5 lakhs multiplied by 1.03. Remember, this cash flow is actually being paid. This cash flow is being paid at the beginning of year two. This cash flow is being made at the beginning of year two, but for the purpose of discounting, we are considering it as end of year one. Beginning of year two is the same as end of year one. Beginning of year two, we are making a payment for the year two, but for the purpose of discounting, I'm considering beginning of year two as end of year one. Further, the next year it's going to be 5 lakhs multiplied by 1.03 the whole square. The year after that, it will be again 5 lakhs multiplied by 1.03 whole cube, and then 5 lakhs multiplied by 1.03 whole power 4. The next year, it will be 5 lakhs multiplied by 1.03 whole power 5. And then it will be 5 lakhs multiplied by 1.03 whole power 6. And so on. 1.03 whole power 7, 1.03 whole power 8, and 1.03 whole power 9. All right. Now, don't write 5 lakhs multiplied by 1.03 whole power 10. Reason being, this is actually the payment for the 10th year. All right, the last year is actually the beginning of year 10. This is the payment that we are making at the beginning of year 10, and that is the payment for the year 10 itself. All right, don't we are going to have total 10 payments. Each year we are making a payment at the beginning. All right, so 0 to 9 we are making totally 10 payments. The end of ninth year or beginning of 10th year is representing the lease payment for year 10. We are making payments in advance, and therefore there will be no payment that will be made at the end of year 10. All right, there's going to be no lease payment that will be made at the end of year 10. But at the end of year 10, because we are reasonably certain to exercise the purchase option, we will actually have a payment of purchase price. We are actually going to have a payment of purchase price which is given as rupees 30 lakhs. All right, so at the end of year 10, we're actually going to make a payment of rupees 30 lakhs. If you go through the question, it states that EFG has an option to purchase the property at the end of lease term for an amount of rupees 30 lakhs. End of lease term basically represents the end of 10th year, right? So at the end of 10th year, EFG will make a payment of rupees 30 lakhs to the lessor, and therefore, for the purpose of discounting, I have considered 30 lakhs to be an end of 10th year payment, whereas all the other cash flows, I actually considered them to be beginning of the year payments. All right, I considered 5 lakhs as beginning of year 1 or year 0. 5 lakhs into 1.03 is a beginning of year 2 payment, which I considered as end of year 1. All right, so all of these are actually beginning of the year payments, but the last one is actually an end of the year payment. End of 10th year, I'm going to pay an amount of rupees 30 lakhs. Now, other than that, there was a third type of cash flow also that we discussed, where EFG is actually going to receive amount. EFG is actually receiving an amount from the lessor of 2 lakh rupees. EFG is receiving an incentive of rupees 2 lakhs, which is payable at the beginning of year 2. Remember, beginning of year 2 is also end of year 1. All right, so over here, end of year 1 is represented by this row. Beginning of year 2 or end of year 1 is represented by the row that I just highlighted, and therefore it'll be 5 lakh into 1.03 minus 2 lakhs. I'm reducing it because it is actually a cash inflow. It is a cash inflow, and therefore I'm reducing 2 lakhs. All right, 5 lakh into 1.03 is a cash outflow. 2 lakhs is an inflow for EFG, and therefore I'm actually reducing it. Now we are then going to discount all these cash flows at 9.04 percentage, because this is the interest rate implicit in lease. The question gave that the 9.04 percentage is the interest rate implicit in lease, and that is going to be used as the discount rate to calculate the discounted cash flow. So finally, what we actually have as the discounted cash flow will be equal to the present value of the future payments. What we arrive as the discounted cash flow will be equal to the amount of ROU asset and lease liability that we will be recognizing. All right, now let's start by calculating the cash flows first, followed by the present value factor, and then the discounted cash flow. I'll actually do all of these calculations at my end. I'm not going to do anything except doing simple mathematics. Therefore, you can actually probably pause this video and then actually do the calculations at your end as well, and then continue to look at the video. All right. All right, so I have got a present value or a discounted cash flow of 50 lakh 329. All right, so what did we do? We took the present value of all the payments that EFG is expected to make, reduced it by the incentive amount that EFG is expected to receive, and we also considered the amount that EFG is going to make to purchase the asset at the end of lease term. All right, so we have taken the present value of the lease payments that we are expected to make every year, the present value of the incentive that EFG is expected to receive has been deducted, and then we have actually also considered the present value of the purchase price that EFG is expected to pay. All right, we have considered this only because EFG is reasonably certain that the purchase option will be exercised. If EFG was not certain, if EFG was not reasonably certain that the purchase option would be exercised, then we would not have been considering this cash flow. We would not have considered this cash flow if EFG was not reasonably certain to exercise the purchase option. All right, so I've got the discounted cash flow as 50 lakh 329. All right, so the journal entry for this is going to be on the commencement of lease. The journal entry would be ROU asset debit 50 lakhs 329 and credit lease liability to lease liability 50 lakhs 329. This is the journal entry upon commencement of lease. Now, what we learned earlier is that the ROU asset is going to be depreciated over the lease term. All right, what we generally learned is that the ROU asset will be depreciated over the lease term. All right, but in this case, if you actually notice, the ROU asset at the end of lease term is actually going to be acquired. This asset at the end of lease term will actually be acquired by the lessee, and we will continue to use that asset. We will be continuing to use that asset for business purposes. Therefore, where the lessee is reasonably certain to exercise the purchase option, where the lessee is reasonably certain to exercise the purchase option, the ROU asset will be depreciated not over the lease term, but it will be depreciated over the useful life of the asset. All right. Generally, what we learned was that the ROU asset will be depreciated over the lease term. But in this case, at the end of lease term, the lessee will be actually acquiring the asset, and hence ROU asset in this case should not be depreciated over the lease term, but it should be depreciated over the useful life, because the lessee is going to use this building for its entire useful life. We are reasonably certain that we will purchase the asset at the end of 10th year, and therefore we will continue to use it for the remaining useful life, and hence ROU asset will be depreciated over 40 years in this case. Therefore, depreciation of ROU asset will be is equal to 50 lakhs 329 divided by 40 years. That is going to be equal to 1,25,008 rupees per annum. All right, so we are going to charge a depreciation of 1,25,008 rupees for the next 40 years, and at the end of 40th year, this asset will go down to zero. All right, this asset will go down to zero at the end of 40th year and not at the end of 10th year. Why is it not going down to zero at the end of 10th year? Because we are going to acquire the asset at the end of 10th year, and we will be using it for a remaining period of 30 years, and hence this asset should continue to appear in the balance sheet for 40 years, and therefore we're charging a depreciation only of 1,25,000 each year. All right, that is with regards to right of use asset. I'm not preparing an ROU schedule. Otherwise, I'll have to prepare a schedule for 40 years, which is going to be cumbersome. But all you need to know is every year we are going to charge a depreciation of 1,25,000. Next, coming to lease liability. Let us actually prepare a schedule for lease liability. All right, let's prepare a schedule for lease liability. All right, I will be starting with years. I then have beginning balance. I'm then going to have beginning balance. Remember, in this question, payments are being made at the beginning of each year. Therefore, after plotting the beginning balance, I'm going to have a column for payments. All right. If payments were made at the end of each year, then we have interest first and then payments. But over here, payments are being made at the beginning. Therefore, I will have payments first and then I will compute interest. All right. So after beginning balance and payments, I'm going to have a column for beginning balance less payments. All right. I'm having beginning balance less payments. I then have interest that is going to be calculated at 9.04 percentage. And then I have got the closing balance. I then have the closing balance. All right, let's start with year one now. At the beginning of year one, I recognize the lease liability of 50 lakh 329. At the beginning of year one, on the date of commencement of lease, we recognize a lease liability of 50 lakh 329. Now, on the date of commencement itself, I'm making a payment of 5 lakh rupees. On the date of commencement itself, I'm making a payment of 5 lakh rupees, and therefore, after I make this payment, my lease liability is going to be 45 lakh 329. All right. At the beginning of year one, on the date of commencement, I had a lease liability of 50 lakh 329. Of that, I'm making a payment of 5 lakh today itself. On the date of commencement itself, I'm making a payment of 5 lakh, and therefore my beginning balance less payments is going to be 45 lakh 329. I then have interest at 9.04 percentage. If you think of it, the amount of borrowing that has been outstanding throughout the year, the amount of borrowing that has been outstanding throughout the year is 45 lakh 329. All right, the amount of borrowing throughout the year is 45 lakh 329. On that, I calculate 9.04 percentage of interest, which amounts to 4 lakh 6,830, and my closing balance will then become 45 lakh 329 plus 4 lakh 6,830 130, which is equal to 49 lakh 7,159. All right. So 49 lakh 7,159 is actually equal to the amount of lease liability at the end of year one. It is the amount of lease liability that I will be showing on the balance sheet at the end of year one. Now let's come to year two. At the end, for year two, the beginning balance is going to be the same as ending balance of year one. The ending balance of year one will become the beginning balance of year two. All right. Now at the beginning, so the beginning balance of year two is 49 lakh 7,159. Now, at the beginning of year two, we made a payment of 5 lakhs multiplied by 1.03. We made a payment of 5 lakhs multiplied by 1.03, but we also received a cash flow of 2 lakhs, and therefore the net payment that I've made is 3 lakh 15,000. At the beginning of year two or end of year one, the amount of payment that I've made on a net basis is 3 lakh 15,000. I made a payment of 5 lakh 15,000. I received 2 lakhs, and therefore my net payment is 3 lakh 15,000. All right. So the payment that I'm going to plot down over here is 3 lakh 15,000. Now, beginning balance of 49 lakh 7,159 less 3 lakh 15,000, the amount of beginning balance less payments is 45 lakhs 92,159. All right, it's 45 lakhs 92,159. On this, I'm going to calculate interest at the rate of 9.04%. So 45 lakh 92,159 multiplied by 9.04 percentage is 4 lakh 15,131. All right, so it's 4 lakh 15,131. Now the closing balance will be 45 92 159 plus 415,131, which is equal to 50 lakh 7,290. All right, so at the end of year two, we have got a balance of 50 lakh 7,290. Now the closing balance for year two will become the beginning balance for year three. So again, the beginning balance of year three will be 50 lakh 7,290. 50 lakh 7,290. What I will actually do is now let's actually plot down all the payments. All right. I'm plotting down all the years first. Let us also plot down all the payments so that we don't actually keep switching. All right. I'll take a pause. You also can take a pause. All the payments that we're plotting down over here represents payments that are being made at the beginning of respective years. Year one payment was made at the beginning of year one. Year two payment was also made at the beginning of year two. So let us plot down all the payments so that we are able to easily calculate the lease liability schedule. All right, so I've now plotted all the lease payments so that we can now easily calculate through the interest and closing balance relatively quickly. All right, so we at the end at the for year three at the beginning we had a lease liability of 50 lakh 7,290, and then we made a payment of 530,450, and therefore 50 lakh 7,290 less 530,450 is equal to 44 lakhs 76,840. On this, we calculate 9.04% of interest. On this, we are going to calculate an interest of 9.04 percentage, which is equal to 4 lakh 4,706. So the closing balance will become 44 lakh 76,840 plus 4 lakh 4,706, which is equal to 48 lakhs 81,546. This is the closing balance at the end of year three. That will become the beginning balance for year four. All right, 48, 81, 546. We then have a payment of 546, 364. We have a payment of 546, 364 that is equal to 43 lakh 35,200. All right. So the beginning balance less payment for year 4 will become 43 35 204. On that, we have got an interest of 9.04 percentage, which is equal to 3 lakh 91,902, and the closing balance is going to be 4335 plus 391, which is equal to 4727,102. All right, so the closing balance for year 4 will be 47,27,102. For year 5, that will get rolled forward as 47,27,102. We then have a payment of 5,62,754. We have a payment of 562,754, which brings the beginning balance less payment to 41,64,348. We then have interest at 9.04 percentage, which is equal to 376,457. and the closing balance will then be equal to 45,40,806. All right, if we have to strictly interpret it, what is it going to be like? We had a borrowing of 41,64,348 throughout year 5. Therefore, I charge an interest at 9.04 percentage on it, which is equal to 376,457. And therefore, the closing balance of the principal is going to be the beginning principal plus the interest, which is equal to 45,40,806. That becomes the beginning balance for year 6, 45,40,806. Now at the beginning of year 6, I make a payment of 579,637. 579,637. Therefore, the beginning balance less payments is 39,61,169. On this, we again have an interest of 9.04 percentage, which is equal to 3,58,090, and the closing balance will therefore become 39,61,169 plus 358,090, which is equal to 43,19,258. 43,19,258. That becomes the beginning balance for year 7. All right, so at the beginning of year 7, we had a borrowing or an outstanding principal of 43,119,258. Of that, we are making a payment of 597,026. We are making a payment of 597,026, which brings the principal down to 37,22,232. Now, on this principal, we have an interest of 9.04 percentage, which brings the amount to 3,36,490, and therefore the closing balance of the principal is equal to 40,58,722. All right, so we have 40,58,722. Now at the beginning of eighth year, the balance is 40,58,722. We make a payment of 6,14,937. We're making a payment of 6,14,937, which brings the total liability down to 34,43,785. On that, we are charging an interest of 9.04 percentage, which is equal to 3,11,318. All right. Therefore, the closing balance will then be equal to 37,55,103. That becomes the beginning balance for year 9. 37,55,103 becomes the beginning balance for year 9. You make a payment of 633,385 at the beginning of year 9, and therefore your liability comes down to 31,120,718. All right, it's 31,21,718. You then have interest that you're calculating at 9.04 percentage, which will amount to 2,82,203. And your closing balance of lease liability is going to be equal to 34,03,921. So now at the end for 10th year, 34,03,921 becomes the beginning amount. You are making a payment of 6,52,387. Therefore, the beginning balance less principal payment Therefore, the beginning balance less payment is going to be equal to 34,03,921 less 652,387, that is equal to 27,51,534. Now, this is the amount of borrowing that has been outstanding throughout year 10. On this, we are going to calculate 9.04 percentage of interest, which is equal to 2,48,739. All right, so on a total basis, the closing balance is actually going to be equal to 30 lakh 273. All right, on a close, you have a closing balance of 30 lakh 273. Now you may have a question that the lease liability was actually supposed to go down to zero at the end of lease term. What we saw is by the end of lease term, the lease liability is actually supposed to go down to zero. But over here, it is actually going down to 30 lakh 273. The question is, why is it going down to 30 lakh 273? The reason is at the end of 10th year, you're actually going to pay 30 lakhs for purchasing the asset. and 273 is the rounding error. All right, it's going down to 30 lakh 273 because at the end of 10th year, you're actually going to make a payment of 30 lakhs to purchase the asset, and therefore your lease liability is having a balance of 30 lakhs at the end of 10th year. Once you make that payment, the 30 lakhs will actually get reduced to zero. Once you make the payment, the entry for that will be lease liability debit to cash of 30 lakhs, and it will finally go down to zero. All right. So in this case, you're at the end of 10th year, you're left out with a balance of 30 lakh 273, which represents the amount that EFG is expected to make to entity H for purchasing the asset. All right. So if I have to ideally plot it, what I would do is I would write another row for 10th year. I'm going to write another row for 10th year wherein I'm plotting down 30 lakh 273, and I'm going to make a payment of 30 lakhs. We are then left with a balance of 273, which I will be recognizing as a rounding difference in the interest, and finally the closing balance of the lease liability will actually go down to zero. All right, it will finally go down to zero. Now if we quickly think of the journal entries, although we are aware of it, the interest is going to be recognized as a P&L item. The journal entry for that will be interest expense debit to lease liability. Interest expense debit to lease liability. All the payments are going to be debited to lease liability, and we will be crediting cash. All right. So payments will be debiting lease liability and crediting cash. All right. In this case, because we had a purchase option and because we were reasonably certain to exercise the purchase option, at the end of 10th year, the lease liability did not go down to zero. We were left with a balance of 30 lakh 273, and that would go down to zero only upon payment of the purchase price. All right. Therefore, for 10th year, I've intentionally created two rows. I created two rows. All right. And where I've shown 6,52,387 being made as a payment at the beginning. Remember, 652,387 is as a payment that is made at the beginning of year 10, but 30 lakhs is a payment that is being made at the end of 10th year. Therefore, I'm plotting it in two different rows. I cannot club both of them into a single row, and I cannot show the payment as 36 lakh 52,000 because their timing was different. 652 was made as a payment at the beginning, whereas 30 lakhs was a payment at the end of 10th year, and hence I've split 10th year into two rows, and the first row basically is going to end up with a closing balance of 30 lakhs, which will then go down to zero upon making the payment of purchase price. All right. So this way, the lease liability goes down to zero at the end of 10th year, but the ROU asset is not going to go down to zero at the end of 10th year. The ROU asset is being depreciated over 40 years because even after the 10th year, I expect to actually use the asset for business purposes. Therefore, we use the depreciable life of 40 years. We use the life of 40 years to calculate the depreciation of ROU asset. That is how we have actually solved question number 31. Let us actually quickly see the institute's answer as well. They also have an answer of 50 lakhs over here. We had 50 lakh 300 and something. They recognize the right of use asset and lease liability of 50 lakhs. And then they also have the schedule where they are left with 30 lakhs at the end of year 10. And for year 10, they've plotted two different rows. And therefore, finally, we actually see the lease liability going down to zero. All right. So that is how we actually prepare the lease liability schedule where payments are being made in advance. All right. Where payments are being made in advance. This is how a lease liability schedule is prepared. Now, one more difference that I would like to show you is in the question that we did earlier, where I assumed that payments are being made in advance, the lease liability was going down to zero actually at the beginning of year three itself. The lease liability was going down to zero at the beginning of year three itself, and there was no interest that was recognized in year three. There was no interest that we recognized for year three, whereas in this example, in this illustration, we actually have interest that is being recognized in year 10. Reason being, the 30 lakh payment is being made at the end of year 10. All right, because we still have a payment to make at the beginning of year 10, we are actually recognizing interest for year 10 as well, and 30 lakhs is going to go down to zero only at the end of year 10. All right, in the previous illustration, lease liability went down to zero at the beginning of year 3, whereas over here it's going down to zero at the end of year 10, and hence we actually have interest for year 10 as well. All right, that's it for this lecture, guys. Thank you so much. Bye bye.